Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. A ceasefire between Israel and Hezbollah helps calm nerves in the markets after broader geopolitical worries were stirred by Donald Trump's tariff salvo. And we're getting a fresh sign of Trump's commitment to tariffs with his pick for a trade representative. Jamieson Greer was closely involved with the last Trump administration's trade war. Kevin Hassett's picked to direct the National Economic Council. In our ASEAN Ahead segment, Bluebird, one of Indonesia's biggest taxi companies, will tell us exclusively about its shift to EVs and why they picked BYD over Tesla. And Sri Lanka's central bank sets its new benchmark rate at 8%, an effective reduction of 50 basis points. We'll ask the governor whether more is needed to accelerate the economy's revival. Israel and Hezbollah have agreed to a 60-day ceasefire after weeks of talks mediated by the U.S. President Biden says the deal is a major step to ending the conflict in the Middle East.
Under the deal reached today, effective at 4 a.m. tomorrow local time, the fighting across the Lebanese-Israeli border will end. Will end. This is designed to be a permanent cessation of hostilities. What is left of Hezbollah and other terrorist organizations will not be allowed, I emphasize, will not be allowed to threaten the security of Israel again.
For more Horizons Middle East and Africa co-anchor Jumana Basechi joins us from Dubai. Jumana, this is great news, but some say perhaps it is like a Band-Aid, could get unstuck quite easily.
That is the big question, Haslinda. Certainly a step in the right direction and one step closer towards finding a resolution to the regional conflict that has been going on ever since October 7, 14 months of conflict. Now we have actually started that 60-day truce. Just to give you some of the details of what the ceasefire entails, it is going to be 60 days in nature. So by definition, yes, it is not permanent. But if you listen to the language that has come out of President Biden, even the Lebanese caretaker prime minister, both of them are saying that this is the foundation for lasting calm in the region. Other terms of the agreement, Israel will gradually withdraw its troops from the southern part of the country. It is also understood that Hezbollah will have to retreat 30 kilometers away from the southern border and not to have a presence in terms of army personnel, fighters, or ammunition in the southern part of the country as well. In addition to that, the Lebanese army will be deployed to the southern part of the country, backed by Western support, and an international monitoring agency is going to be set up with, again, the efforts put together by the US and the France to oversee what is happening on the southern border. Now, there is a caveat here, and this is something that the Israeli Prime Minister picked up on yesterday. He said, yes, they have agreed to the terms of the agreement, but if there are going to be breaches by Hezbollah, then Israel do reserve the right to act on them. And as we understand from our reporting, this was a carve-out of and a necessary requirement that Israel were requesting in order to be able to sign on to the ceasefires. So yes, 60-day truce has begun. It is certainly a major step towards de-escalating some of the tensions in the region, but bigger questions remain. And certainly, if there are breaches, then you could see further escalation of conflict once more.
Biden says that it is designed to be permanent. What's needed for that to happen? And, what does it mean for the rest of the region?
So if you think about what Israel's war objective was when the front got enlarged with Lebanon, the priority was to restore stability to the northern border and allow the 60,000 odd families to return to their homes in the border without coming at risk of fire or rocket attacks from Hezbollah. So the priority there is to ensure that those rocket attacks from Lebanon don't continue. From the Lebanon perspective, the process of rebuilding now has to begin. 1.2 million families and people have been displaced over the country. There is a big question as to whether or not those families can actually return to the southern border. But crucially, what is at stake here is that Hezbollah ceased to fire rockets into Israel. And as a reaction to that, Israel no longer continue with, number one, the ground incursion in the southern part of the border and those ongoing airstrikes on specific buildings and structures that have been taking place around Beirut. The other part that is under discussion as well is to stop the passage of arms that have been smuggled through via Syria from Iran into Lebanon as well. And so there's also been a lot of communication about what's been happening on the northern border of Lebanon. That is the border that separates Lebanon and Syria, to ensure that arms don't continue to get smuggled back into the country, to ensure once again that Hezbollah doesn't rearm and remobilize once more.
We've heard Israel say again and again that it reserves the right, it retains the right to strike. I mean, how are we looking at that?
And as I was saying, Haslinda, I think this was a key point to actually get the Israeli side to sign on to this ceasefire agreement. Now, we haven't actually seen the details of what the truce entails. What we know is that it is 60 days. The international monetary system is going to be set up there, the gradual withdrawal of troops. But from what we understand, there was this special carve-out which gives Israel the ability to attack. And this was the exact words of the Prime Minister yesterday. He said, if Hezbollah breaks the agreement and tries to rearm, we will attack. For every violation, we will attack with might. And so the front has calmed down, but it's still an active one. And then the next question is, of course, what the ramifications are for the potential ceasefire discussions that are going on with Gaza right now. And since that 1 week truce in November, post-October 7, every single mediation effort since then has failed, despite the best efforts from the Biden administration, from the Qataris, from Egyptians. No truce was in sight for the Palestinian territories. And I think this now actually enables the focus of the international community to shift towards that other front, in the hopes that a ceasefire can also get across the line there and those hostages can also be released.
That's right, a reference to the 1701 Act. Jumana, thank you. Horizons Middle East and Africa co-anchor Jumana Basachi. Now to the U.S., where the Trump transition team has announced a pair of key appointments to help lead his tariffs and tax cuts agenda, confirming an earlier Bloomberg scoop. The president-elect has picked Jamieson Greer as U.S. Trade Representative and Kevin Hassett to lead the National Economic Council. Greer is a longtime protege of Robert Lighthizer, who served Trump in the same role in his last administration, overseeing the implementation of tariffs. Greer was Lighthizer's chief of staff during that term. As for Hassett, he served as a senior advisor to Trump and as chair of the Council of Economic Advisors during his first stint in the White House. If confirmed, both will work closely with Trump's pick for Treasury Secretary Scott Bessent. Well, this newly named picks for U.S. Trade Representative and National Economic Council chief, making sure Trump's tariff policy continues to dominate the conversations for investors. Let's get more with Raisah, Rasid, global market strategist at JPMorgan Asset Management, joining me now here in Singapore. Does it even matter? We saw how Trump just went ahead with an announcement on tariffs. It doesn't matter who his picks are. Wouldn't you agree?
Well, thanks for having me. So I think we have to appreciate the fact that we are operating under a veil of uncertainty. I think that's number one. To your point, tariffs is really effectively a tool for negotiation. So in actuality, all the tariff rates that we've heard, 60% on China, 10% on the rest of the world, for example, that could be lower in reality, right? And I think one thing, if you just take a step back, his Greer appointment, President-elect Trump, effectively says that tariffs will be front and center in his administration, and that's something that we have said before, and it's really coming to reality right now. But if you just consider what's happened since 1.0 Trump tariffs, we have seen the reorganization of supply chain already. If you just consider China's import share into the U.S., that has fallen from about 21% to 18%, whereas China's share of global exports has remained the same. And that really speaks to the fact that we are already seeing or have seen that sort of reorganization of supply chains. Now, what the Tariffs 2.0 will do, however, if we think on China that really comes to fruition, that could accelerate such process, especially on strategic materials. So we're talking about critical metals, talking about semiconductors, solar cells, for example. Now, if we're talking about universal tariffs, however, that gets a little bit tricky. So the reallocation of resources could come a little bit more more trickier, I would say.
Suffice to say, it's been disconcerting for investors in this part of the world. There's been a divergence. Yeah. You take a look at the S&P at yet another record high, 52nd, I think, record high for the year. Yet we're seeing trepidation in Asia. Talk to us about how the markets are diverging and how you should be playing this market.
Yeah, I mean, let's just start with the Asia piece as well. I think politics is important, but it's not really the only theme that's at play right here. Underlying the US right now is also a business cycle that is evolving in a very favorable manner. When you look at corporate spending, for example, those are still holding up relatively well. It was really could explain why the S&P has done what it has as well. On a cyclical basis, on a structural basis, we have spoken about AI extensively as well. That's really pushing the S&P 500 into the new highs. On Asia, for example, we are moving into a different regime. Before, when US does well, Asia tends to do well, and they go hand in hand. However, the sort of US exceptionalism that we're talking about right now is growth that's a little bit more insular. So that would really matter more for US corporates. And so the tailwinds that we used to receive from US may not necessarily spill over into Asia this time around on a cyclical basis. However, there's still opportunities within Asia as well. You talk about the structural play, again, that tech piece as well that has really benefited Taiwan on a corporate governance level, on Japan, that fiscal package that we've seen last week as well. So there are still opportunities in Asia, but really the importance here is staying active and be selective for portfolios.
We keep asking the same question, how long US exceptionalism will continue? We have the likes of DB, Deutsche Bank, coming out to say that S&P will get to 7,000 by the end of 2025. I mean, can that pace of increase, that rally continue through 2025?
So again, operating in like that policy fog right now, direction-wise, we know that the S&P has the potential to go higher. Cyclical basis, business cycle extension could really help certain sectors, consumer discretionary, financials, industrials, for
Bearing
example.
in mind, though, that the Mag 7 have been driving that rally that we've seen so far, it'll be a different story in 2025 or not?
Yes. So in short, yes, we do think that there will be that broadening away and that for this time round, we could see that cyclical sectors really benefit. And these sectors, you're right, to your point, that has lacked that tech dominance, we will be seeing that broadening of the equity performance in the US basket in 2025.
So what does it mean for Fed policy? What does it mean for rate cut trajectory? We know that as the rally continues, that would possibly force the Fed's hand to slow down its rate cuts.
I think market is right. So markets have really priced out some of the rate cuts slated for 2025, and I think the markets are really onto something. So we think that the Fed could potentially go again in December, and maybe about
25 in December?
25. Again, close call. We saw the Fed minutes overnight. They are going to adopt a very gradualist approach, and rightfully so, because again, we're operating under such a uncertain environment right now. What they would do is they would probably cut 2 more times, get to somewhere about 3.75 to 4% on the Fed funds rate, pause, reassess the information that they have right at then and then with regards to the policy. Just bearing in mind whether there could be a resurgence in inflation, which we think would be one of the key risks coming in or going into 2025.
So how might this play out in Asia? We have the likes of Indonesia, Korea, needing to cut rates to boost growth. How might this play out for Asian markets like Korea as well as Indonesia?
So funny you mentioned Korea. So obviously we're having a Bank of Korea meeting this week, and we think that they could potentially stay on hold. So in Asia, again, because of the insular US growth exceptionalism story, we're not going to get the tailwinds in Asia. So at the same time, central banks need to cut rates, but because of financial stability concerns such as currency depreciation, their hands are tied right now. So most likely Bank of Korea would be on a wait and hold basis for this week, for example. So they would have a dovish hold, and that could be true of many other central banks in Asia, which has financial stability as one of their key mandates right now, so they can't really afford to cut rates. That being said, if you just look at financial conditions in Korea, however, those has loosened as well. So the hope is that with the loosening financial conditions, that could at least inject some sort of enthusiasm, or at least some boost into the markets right now.
Let's talk about China. Increasingly, people are talking about an EM strategy ex-China. Is that the way to go?
So No, we still think that China is still very critical. So if you just take a step back and think, what does China need? Operationally, they need resolution on two things: debt. So they need that kind of resolution from the local government to the central government. And they need to really have a resolution over the excess housing inventory, right? So the policy intent is there. We're still waiting. In the near term, we are getting that Central Economic Work Conference in middle of December. So we are going to wait on what sort of policy guidance they could put forward for 2025. That being said, domestic policy will be so critical for China in 2025 in the face of that geopolitical tensions, tariffs, etc. So it is really, really key for China. But even if the fiscal stimulus don't come through, there are still plays in China, high dividends, for example, high dividend stocks. If you just look at some of the state-owned companies, those could be opportunities as well. If the fiscal stimulus does come through, then we could be looking at some of that quality companies that we've been waiting on the sidelines because we're waiting for the catalyst of fiscal stimulus to come through. So this includes the technology sector, for example, that evaluations are still pretty attractive.
But the thing is, do you wait for the stimulus to come in, or do you dip your toes already? Would, a dip be a buying opportunity in China?
I think that might be right, because I think at the end of the day, you have two scenarios, right? So you're talking about high dividend stocks in China, or some of the stocks that could really, really benefit with the stimulus on the private sector companies as well. So having the exposure to China, we think, is still very important in portfolios.
Give us a sense of the Asian outlook. If you are looking at your portfolio, I mean, which are the Asian countries which would provide the returns that you're looking for in 2025?
So we've spoken about China. Japan is something that looks very interesting as well. So on a cyclical basis, we have seen that $250 billion fiscal stimulus package that really addresses that wage gains that we've been looking for domestic demand. So again, we're talking about external sector that looks a little bit muddy right now. So for the fiscal stimulus to really step up and really boost domestic demand, that is something very positive for Japanese equities. And a more structural basis, you still got that corporate governance story going on as well that really prioritize shareholders, for example. So when you put the two and two together on a more near-term and a longer-term basis, Japanese equities, they look good. Again, on structural basis, if you look at some of the tech play, AI, that was not going to change under any administration. That was a more structural, long-term theme. So Taiwan, some of your Southeast Asian countries that really participate in the tech supply chain, that could really benefit as well.
And what do you see the BOJ doing in the coming months?
So the Bank of Japan, we think in December they could potentially hike rates. And the simple answer is because of all that domestic demand story that we're talking about. What Bank of Japan was needing to look out for was that wage price spiral. And we are seeing evidence of it in some of the recent inflation reports in terms of services, CPI, etc. So we think that they would likely go in December and potentially more in 2025, depending on how domestic demand really evolves.
But the question also lies in what the Fed does going forward. Right. I mean, how closely is it watching the Fed, and how is that influencing the BOJ's own decisions?
I think you're right. So the Fed and the U.S. macroeconomy is very, very critical for Asia and Japanese backdrop as well, the macro as well as the Bank of Japan. So at the end of the day, it is about the interest rate differentials, right? So at the end of the day, if the Japanese yen does take a very massive hit, maybe because of weaker growth or increasing growth uncertainty, U.S. dollar rising, for example.
And that is the trend that we're expecting, that dollar exceptionalism, and that will continue to weigh on the currency.
Exactly. And I think that's true not only for the Japanese yen, but true for the other Asian currencies as well, which goes back to the point earlier about how central banks' hands are quite tight right now.
Okay, India. We have to touch on India. It does seem like it's been propped up by retail investors. I think something to the tune of $7 or $10 billion that's been getting into the Indian market, despite the fact that foreign funds have been making exit. Do you buy India now?
So India, you can juxtapose it with the China story, right? Because China's valuations are low, India valuations are high. A long-term strategic story, India is very constructive. You have that demographic trend going. In China, we're still waiting for the stimulus to come through. So really, I think what we're going to look out for in the case of India is how the Modi government really kind of enact that infrastructure program going forward in the near term. So that will be very critical in terms of India. But the valuations there is unfortunately a constraint over there, but they're still strategically important, we think, in Asia.
But Will sentiment be impacted? Will performance be impacted by the exit of foreign funds? This is a market that's been boosted pretty much by local players.
Yeah. So if you would just couch India in the fact that we're talking about tariffs, China, etc., India seems to be a little bit further away from that core of that issue.
So insulated.
Yes. So on a manufacturing basis, India is a little bit more insulated for it, which is why when we talk about diversification portfolios for Asian equities, India comes to mind as well. Because on the services side, that could really benefit as an opportunity, buying opportunity in India as well. So really diversifying and getting away from that core, the heat of the whole issue, the crux of the issue, India actually stands out in that sense.
Despite the optimism that we're talking about in terms of prospects for 2025, the risks are real. I mean, geopolitics still in play. We have the uncertainty of Trump's policies. Where do you hide? What's the hedge? What is a must-have to protect your returns?
So simple answer is we still like that diversified portfolio. So U.S. equities, we spoke extensively about it right now. It's not only about the magnificent, the tech growth stocks, but we're talking about the cyclical stocks that can relatively do well as well. Asian equities, we spoke about Japan, we've spoken about China, India as well. Having that in the portfolio is really key. But at the same time, you spoke about the risks. So the risk of a potential slowdown is real. We don't talk enough about it because there's optimism in the markets right now. But that being said, if we actually are in a slowdown, quality fixed income based on past performance have tended to outdone equities. So having that quality fixed income, whether is it US or really just diversifying, that would be really, really key in that portfolio.
Hold more gold, no?
So gold's interesting, right? So if you just think about gold, gold has retreated a little bit because geopolitical tensions have come down. The support system that's propped up gold prices so far this year, north of 20%, is really the central bank buying and Fed cutting rates. Now, we've talked about markets actually pricing out some of these cuts as well. So we do think that gold prices could really trend somewhere around here or even slightly, go down slightly.
So do you hold more gold or not? It's 5% in your portfolio?
Yeah, so real assets is important in a diversified portfolio, but sizing up with your traditional 60-40 is really, really key in portfolio allocation.
All right. Thank you so much for that, Raisah. Raisah Rasid, Global Market Strategist at JPMorgan Asset Management. Now, still ahead this hour, an exclusive conversation with Sri Lanka's central bank governor as it introduces a new overnight policy rate. Plus, Bluebird Group President Commissioner Noni Purnomo will be joining us exclusively to discuss opportunities in Indonesia's taxi and ride-hailing space. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Now, voting is underway in Indonesia's capital to choose its next governor. The Jakarta contest is the most prominent of elections happening across 37 provinces. It's seen as an early test for President Prabowo Subianto, who took office, if you remember, just last month. Avril Hong has been watching this, and you know what? Even though they're looking for a new capital, Nusantara in Kalimantan, Jakarta remains important.
It is still the seat of power, and that is where this importance of the governor election kind of comes in. And we look at the outcome of the election and the sort of implications this might have for Prabowo Subianto. I mean, you see how there are already concerns about whether, they garner enough support in Central Java, in Jakarta. It's not just Jakarta that's holding these elections, as you alluded to a short while ago. And that could have implications for some of the policy implementation. He has really ambitious plans, 8% annual growth, $30 billion lunch program for school children. And the concern is surrounding if they don't clinch Jakarta, what this is going to mean for control over Java, which is, of course, the biggest city in Java where half of Indonesia's population lives. So does this mean political resistance that would make it a bit more difficult for him to implement some of his policies? And for now, it looks like neither candidate, the top two candidates are, of course, Prabowo's choice as well as the opposition's, and they don't seem likely to get more than 50% of the votes, which means a runoff could be likely.
And also, we have to point out that this is a decentralized political system. Regional leaders actually play a huge role in terms of implementing policies. How are investors looking at this?
Yeah, I think the key thing is the extent in which Prabowo is going to be able to implement its policies, right? So if you look at how there's already been a bit of concern, it's coming at a time where Indonesia stocks and bonds are experiencing a sell-off. $1.5 billion in terms of foreign investor pulling out of those markets since Trump's election victory. It's already a very tricky time. And we could see further selling in Indonesia's stocks if Prabowo's candidate doesn't do as well as hoped. I mean, you look at the stock market in Indonesia, this month alone, it's lost about 4%. And it's not just stocks and bonds. It's also showing up in the rupiah following Trump's election victory as the greenback kind of shows this strength. We've seen the rupiah come down about 1.5% this month as dollar rupiah has moved off its September lows as well.
And of course, it's making it really complicated for Bank Indonesia. It wants to cut rates, but it is in a very difficult position. Avril Hong, thank you so much for that. Now, a weaker Indonesian rupiah presents significant challenges for Indonesian industries that are heavily reliant on imports. That includes the transport sector. Well, our next guest runs Bluebird Group, the largest taxi operator in Indonesia, which is turning to China's BYD for the bulk of its EV fleet. Joining us exclusively, Noni Purnomo, President Commissioner of Bluebird Group. Ibu Noni, thank you so much for joining us. We know that the focus in the market has been on that strength in the dollar, putting a lot of pressure on the Indonesian rupiah. How are you looking at the impact of Trump and Trump policies? How concerned are you about the impact you might feel for your business?
Well, thank you for inviting me, Haslinda. I think you're right that the exchange rate, the weakening of rupiah against US dollar affect a lot of businesses. But luckily for Bluebird, we have been around for 52 years by now, since 1972. And we had been through 1998, if you can remember what happened then. So since then, we have learned to navigate through the rise of exchange rates, and we have learned also to manage it well. What is affecting our business, as you mentioned, is the import price of the vehicle itself. But in companies like Bluebird, when we buy vehicle, we buy in bulk, and we normally already have planned for a yearly plan. And we already have signed a price in advance. So that way we can manage the fluctuation of the foreign exchange quite well. So the one that is affected operational-wise is probably the spare parts area. And if we plan to have additional vehicles next year. So hopefully by next year, Trump government already settled down and Indonesian government already adjusted our plan as well. And hopefully we will be able to manage the exchange rate by then.
We talk about supply chains, Noni, of course, with Trump's reshoring policy, wanting manufacturing to get back home. I'm just wondering how you're looking at how the impact on the Indonesian economy.
Yeah, I mean, as mentioned earlier, that we have quite a lot of outbound of foreign direct investments. But Bluebird, we strongly believe in the fundamental of Indonesia, the resources, the people. So we believe, because we are still a developing country and we also present, Indonesia present a lot of opportunities for investors to come in. We hope that this, the outbound is only momentarily. So when things started to settle down, we hope we'll be able to get the foreign direct investment back. And especially because President Prabowo is aiming to have a very high economic growth of 8% within 3 years. So I'm sure our government is going to have some policies to attract more foreign direct investments.
Noni, where do you see the growth opportunities for Bluebird?
Oh, well, as we know, transportation sector is one of is the sector that has the highest growth last year, and we're pretty blessed and that we had our first half 2024, we had 15.4% growth in our revenue. And the potential of transportation growth is still huge. I believe that we plan to have about more than 15% and more than 3.03 CAGR of transportation growth from now until 2029. So the opportunity is still huge. And with the rise of the middle class, I know we talk about this. There's always a talk about the shrinking of middle class income. But with the fundamental resources that we have and the push that the government is going to do, we believe that the middle class is going to rise again in time, and we'll be able to meet our target growth. And by then, in order to support the growth, the main infrastructure that needs to be built is the transportation, whether it's passenger transportation or goods transportation.
We know that it is a competitive environment and you are competing with the likes of Gojek, Grab. How is that coming along? What's the strategy to overcome that competition?
Yeah, since the very beginning, we always focus on giving the best possible services. So we are a transportation service company. We understand that we're not a technology company, and therefore, with our limited budget, we need to focus on what is important for us. So since the online era in 2016, we have been transforming our company to become more of a mobility as a service company. What does that mean? And since 2019, we have implemented a new strategy, which is 3M. The first M is multi-product. So we have been expanding our products, so not just regular taxi and Silverbird executive taxi. We also have Golden Bird car rental. We have buses. We have introduced the additional service of shuttle buses from city to city. And the latest addition is the BRT, Bus Rapid Transportation. So we're expanding our services. And we're also expanding our multi-channel. We work together with so many different companies to expand our reservation channels. And we're also working on multi-payment.
Noni, earlier you talked about how you buy your fleet, your cars in bulk. We know that BYD, for instance, has been making inroads in Southeast Asia, in particular in Jakarta, in Indonesia. Talk to us about your plans for sustainability and EVs. What kind of ratio are we looking at, and what kind of purchases are you looking at?
Yeah, I think honestly, we have been lagging in our implementation of electric vehicle. This is due to the price of the electric vehicle itself. So we're very happy that BYD is now investing in Indonesia, and we hope very soon the price of electric vehicles will be reduced significantly, because at this moment, the price for us is about 3.5 times of the combustion engine. We still continue buying, but not as many as we planned to be. But the way we implement our sustainability is not just through buying electric vehicles. We're also implementing, while waiting for the electric vehicle price to come down, we're also implementing a CNG-based vehicle instead of just the regular combustion engine vehicles. So
but the question really is, how big will your EV fleet be in comparison as a whole?
Yeah, we actually planned by 2030 to have at least 20%, but at this moment, we're really lagging, as I mentioned. So by next year, we'll target to have about 3%. And if the car price can reduce, then we can definitely accelerate and come back to our original plan again.
It always comes down to price. Noni Purnomo, Bluebird Group, thank you so much for joining us today. Well, up next, our exclusive conversation with the Central Bank of Sri Lanka after his decision early today to ease what is now the key interest rate. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. In another busy week for central banks, Sri Lanka is among the latest to ease lending costs while also introducing a new benchmark measure, the overnight policy rate. The new level of 8% is effectively a 50 basis point cut. Let's hear more about the thinking behind that decision from Sri Lanka's central bank governor himself. Nandalal Weerasinghe joins us exclusively live from Colombo. Governor, good to have you with us. Take us through the thinking behind today's decision.
Yes, and of course, today's decision to ease monetary policy by about 50 basis points and also moving to what we call single policy rate is mainly based on the decision by the Monetary Policy Board looking at the current inflation versus future projection as well as the economic recovery in the next 12 to 18 months. If you look at current inflation, it's in fact the deflation situation, mainly because of some of the administrative price changes of reduction of electricity tariff and fuel prices. This is why inflation became a deflation situation last couple of months and is going to be continuously next couple of quarters. We will see negative inflation in Sri Lanka. This is, of course, after long, very peak inflation of 70% we had in 2022. I don't mind having a period of deflation, but in our projections, we will move into our inflation target of 5% in about 12 months' time. So in that basis, we saw some space for us to reduce our policy rate, ease monetary policy stance to support the recovery of the growth and also target inflation in the range that we think the appropriate rate
Right.
under inflation targeting regime.
You talked about the single policy rate. I mean, there's still a lack of clarity on the structure. Could you talk to us about the structure?
The structure, if you can remember earlier, we had dual policy rate, which we announced SLFR, lending facility and deposit facility for interbank. But instead of announcing two policy rates, we move into a single policy rate, which is what we call overnight policy rate, where we want to target short-term call money market rate within the interbank market towards the single policy rate, which is now around 8%, which was earlier, before today, it was around 8.5%. So it's effectively easing here, which gives much more important effective signaling and also much more effective monetary policy transmission, because we are now talking about the single policy rate instead of two policy rate, which will much more clearer signal to the markets, which will improve effectiveness of monetary policy transmission, as well as which will improve signaling of monetary policy stance of central bank to the markets. It's much more clearer, much more established, and improvement in the monetary policy framework.
How much more room do you have for further policy easing?
When you look at our inflation target, 5% medium to long term, and current policy is around 8%, we can see clearly real interest rates in terms of policy rate about around 3%, even forward-looking basis. If we see if the economy is going to be growing much faster than the output gap, closing the output gap, and also inflation is going to be moving around where we target. I think we have a sufficient balanced monetary policy now. Going forward, obviously, it will be based on the forward-looking and also the evidence-based monetary policy decision, which will be in January. At that point, we will assess our outlook at that point. I think, in my view, we are in the right balance right now. Next decision will be based on how we see the next inflation. In my view, we are confident that we should be able to maintain inflation around the mid-single digit 5% without much effort going forward. I think next decision will be based on how we see at that point. Right now, we don't see a significant risk in breaching the inflation target in 12 to 18 months.
Right. Is there a sense that the Trump administration, Trump 2.0, may just complicate your policy trajectory? People are talking about how his policies are inflationary, and even the Fed is wanting to wait before making its moves. It wants to see what the policies really are. Is that complicating your own policy trajectory?
When you look at Sri Lanka's monetary policy implementation, in fact, our monetary policy decisions are predominantly based on domestic economy, because Sri Lanka economy right now not so much exposed to global capital flows and global interest rates because our capital account is not fully open, and also we had not much of short-term inflows and outflows to Sri Lankan capital markets where in response to global interest rate changes or any global changes. So we don't expect a significant impact in terms of delay in interest rate reduction by the Fed, or there could be some impact in terms of Trump's trade policy. There could be trade diversion from some of the markets to other markets. That's where US is an important market for exports, and also EU is an important market for exports. There could be some impact on the trade flows, but in terms of financial flows, we don't expect a significant impact. That's why we think our monetary policy decision making will have no major significant impact in making monetary policy in Sri Lanka because we are not so much exposed to global financial markets.
But even so, a lot of emerging markets are concerned about dollar exceptionalism. We've seen how the strong dollar is impacting emerging markets, especially in this part of the world.
That's correct. But if you look at Sri Lanka's situation, what we are now facing a situation where rupee is appreciating against the dollar continuously. For example, this year almost 11% appreciation against the dollar compared to a lot of other emerging market countries have depreciated against the dollar. This is a unique situation that we are facing because of the more investor confidence and also moving into important policies like debt restructuring, the staff level agreement, and also other domestic policies are helping improve the confidence. As a result, we are seeing in the last 2 years, after significant depreciation in 2022, continuous appreciation against the dollar. This is from our point of view, we don't see a significant impact. I think, in fact, our pressure is now preventing a sharp appreciation of the Sri Lankan rupee against the dollar that we are seeing 290 came from 370 some time ago, about 1.5 years ago. So we going forward, and also at the same time, we have been building up our external positions, resource, significantly from the position where we were during the crisis. So we continue to build up our resource, and we use that opportunity to build our resource, and also we can maintain exchange rate around certain stability while allowing market to play the role in determining exchange rate in demand and supply situation.
Governor, how are you assessing the potential for growth in Sri Lanka on the back of Sri Lanka signing the agreement with the IMF at the staff level? Will that be a game changer for growth?
In fact, if you look at, there are 3 important things happened recently. First one, the political stability. After 2 presidential election and the parliament election, now we have a strong, stable political system. That certainly will help to stabilize the political situation. Secondly, the reaching staff level agreement with the IMF to complete the 3rd review, that's also an important signal. Thirdly, the announcement of launch of ISB, Intra-Sovereign Bond Exchange, which was launched yesterday, which also we are hoping to complete within a very short period. Those are 3 important developments that has happened already in the Sri Lankan economy going forward. And in addition, today, monetary policy decision will also provide additional boost for the economic recovery and maintain inflation. So these 4 factors will certainly provide much more confidence, and we hope that continuous recovery of the economy will continue towards next year as well. As we are seeing so far, 4 quarters of positive growth will continue at the same trend in the next year as well.
There is another important development. We know that Sri Lankan president has pulled back on IMF pledges. He says he's unsure if that agreement is going to be beneficial for the country. How are you looking at that?
But if you look at the latest statements by the government and also the statement by the president soon after he was elected, he gave the assurance that he will continue with the program with the IMF. That was the first announcement he made 2 days after he was elected. And then after the parliament election, soon after the election, IMF mission was here, and government, especially the president, as a finance minister, agreed to maintain the commitments that we have already had with the IMF. And as a result, government was able to reach staff level agreement. So that gives a signal that current government, the president, under his presidency, will continue to maintain commitments under the staff level agreement, and that program will go ahead. I don't think there's any concern or doubt about the IMF program that will continue. That IMF President and the government has given assurance under the latest staff level agreement.
Governor, how would you describe the relationship between the central bank and the president? How much stability is there?
If you look at the central bank after the new Central Bank Act, which was enacted and passed by the Parliament in 2023, which came effective from September last year, now Central Bank is an independent entity. We have much more monetary policy independence as well as accountability. So under which, irrespective of the administration, Central Bank can operate independently in implementing our mandate of price stability and also maintain financial stability. I don't see any problem with Central Bank independence and Central Bank ability to deliver its mandate independently under the new Central Bank Act, which is the law of the country now.
Right. Governor, thank you so much for joining us. Nandalal Weerasinghe, Governor at the Central Bank of Sri Lanka. Now, before we go, let's take a look at the Indian markets. Been trading for about 10 minutes now. Of course, Asia in trepidation, swinging between gains and losses. India in pretty much the same stories. The Sensex index and the Nifty index pretty flat right now, 79,982. All eyes on those Adani stocks, of course. Before we go, here's a look at tomorrow's show. Templeton Global Investment CIO Manraj Sekon will be joining us to discuss market opportunities, including their recent foray into Saudi Arabia. That is it for Insight. This is Bloomberg.